Hey everyone, Frank Chen here with REIClub.com, the only site you need as a real estate investor. In today's quick video, we're going to talk about seller financing and some of the quick pros and cons. Now, seller financing is pretty much a loan where the seller in a transaction offers the buyer a loan, so the buyer does not have to obtain one from the bank. Okay. Now, usually the buyer will put down some kind of down payment to the seller and then make installment payments, usually on a monthly basis over a specified time and at an agreed upon interest rate. Now, they have to do this until the loan is fully paid off or until a new loan is put into place to retire the seller's loan. Now, seller financing is an alternative worth considering when, say, the buyer has no cash for a down payment sufficient to qualify for a conventional loan. The buyer is simply unqualified for a conventional financing. The property is one that conventional financing will not finance, or the property has simply been on the market for far too long with little buyer activity. Now let's go ahead and jump into the seller financing pros. Since you are the lender, okay, the terms of the deal are far more flexible and negotiable, okay? Also, the seller may be in a position, okay, to command full list price or higher, okay? So you're gonna get a higher sales price. Also, you qualify for certain tax breaks. And also, you can collect on monthly income higher than usual, okay? So on top of the rent, because of certain interest rates and fees, you're going to be able to collect higher monthly rent. Also, you have favorable returns, okay? Higher interest rates because owner financing can carry a higher rate of interest compared to, say, other investment types. Also, you have shorter listing terms, okay? So offering owner financing on any type of deal you have moves the property so much quicker. And this definitely means for hard to sell properties. Also, you're able to attract larger numbers of interested buyers, and it gives buyers time to repair their credit to qualify for, say, a conventional loan. You also can eliminate possible repair costs for yourself because you can sell the property as is to a tenant buyer. Also, you have substantial savings when it comes to closing costs. And say you're looking for some kind of exit strategy or something like that, you can sell the contract you have with your tenant buyer and cash out. It's called note buying, and there's a lot of investors out there who do note buying, so that's kind of a possibility for you. Now, let's talk about some of the owner financing or seller financing cons. First of all, you have to be familiar with what's going on in current loan terms, okay? What are other institutions offering in interest rates? What are the percentages? You have to know these things in order to negotiate with the tenant buyer to be favorable to yourself, okay? Now, buyer can also possibly default on their loan at the end of their term. Maybe they could not qualify for a conventional loan, or maybe they can't afford paying you anymore, so you're just kind of stuck with that property still, and you don't have a tenant, okay? Now, the property also may need possible repairs when the tenant decides to back out or defaults, if that happens. So it's additional hassle. And then you have to remember there is no full equity payment when it comes to seller financing. Okay, you have to kind of wait till the end of the term. Also, you have to deal with the headaches of being a lender, and there are verification processes where you have to provide tax reports. You have to verify that the properties have been paid for, and the owner has maintained property insurance. Now, if you kind of turn to seller financing because your property's about to face foreclosure, well, if the tenant decides to back out, you kind of back where you started. And just like any kind of lease deal, you kind of still have to deal with evictions, which are kind of time consuming and can be rather a bit of a headache, okay? Now, in conclusion, guys, if you are a seller considering using this strategy, you should make sure that you can afford waiting for the equity and are comfortable collecting on monthly cash flow only for the period of the note. Now, you need to also be very thorough with your background checks and make sure whoever your tenant buyer is does not have any major lawsuits against them, any kind of liens put against them from their previous property, or any kind of just outstanding debts, okay? Just very important to do that research. Also, be sure you consult with your real estate attorney because there are financing, disclosure, and repayment term requirements that must be met, and they do vary per state, okay? Guys, remember, guys, in most cases, as the seller, okay, offering seller financing, you're assuming most of the risk. So do take the time. It's definitely worth your while to do the research and these thorough background checks. Again, guys, this is Frank Chen with REIClub.com. Do me a favor, please leave comments below about what you thought about the video, as well as click the like button because it really does help us out. But most importantly, click the subscribe button so we can actually keep you informed when brand new videos are posted. Guys, I look forward to talking to you next week. And as usual, thank you so much for your time. Good investing. Take care, and bye-bye.